Greetings, everyone. I'm Angelo Robles, and welcome to my Family Office TV. I'm also the founder and acting chairman of Family Office Masterclass and SFO Continuity, my very intimate 30 founding members private membership organization. Some of you, if you haven't seen me in a while, know me as being the founder and near 2 decades CEO at Family Office Association. And welcome. I do a interview series, being partially based in Greenwich, Connecticut, know a little bit about the alternative investment industry, and one of the titans we have on today. We're so fortunate to hear the insight in one of his longest recorded interviews. I'm very honored. We talk about geopolitics, politics, economics, macro, oil, gold, lots on stocks, and broadly investing. The title is When the Person's Name Makes It in the Title, You Know It's Good. Leon Cooperman, hedge fund icon, billionaire, and philanthropist. Leon has spent 25 years with Goldman Sachs. During that time, he famously built the company's asset management division and became its chairman and CEO. He founded Omega Advisors, his hedge fund, in 1991. And in 2018, he converted his highly successful hedge fund to, well, of course, a family office. It's really an honor. I have interviewed Lee in person, actually in Palm Beach in the past. He was very gracious. But to have the amount of time that I had with him in this interview, and he caught me a little off guard. He said some incredible things, and I was actually a little nervous. I normally don't get nervous on the stage or at interviews. But he's Leon Cooperman. He's a legend. I was so fortunate. I hope you have a chance to watch the interview in its entirety. I hopefully asked some questions you're not used to someone of his stature being asked. And hopefully, well, I know I did, get some interesting commentary out of Lee. You do not have to agree. There's some that, of course, I didn't agree. He's a little bit more successful than me, but you have your own opinion too, and that's fine. At the end of the day, think for yourself. On that note, I hope you enjoy my interview with the one and only Leon. We all call him Lee Cooperman. Enjoy. So Lee, welcome to the show today.
Thank you very much. You're very kind in your introduction. Kinder than I deserve.
No, if anything, it was underdoing it, but you have a very busy schedule. I'll get to it. We have a fair number of things to copy, and I'll try to be sequential because I think that helps set the stage for the audience. My audience is primarily single family offices, incredibly successful people. They're very concerned about what's going on. We may get a little bit to geopolitics later, but more importantly, economics. What's going on in the country, inflation, rising interest rates, and although it seems like the economy in many ways should not be the stock market as strong as it is. So it's kind of an unusual dichotomy, if I could use that word. Why don't I start with inflation? We're led to believe, and maybe so, money printing. We're led to believe supply and demand within a market infrastructure. Some would argue and vehemently disagree with me, rising wages. To you, what is the number one cause of inflation?
A government that spends more than it takes in consistently. And we have that in spades. You know,
we have a $34 trillion deficit. We don't take in enough tax revenues. What's a way to offset that deficit if we're not having enhanced population and GDP growth?
We have a spending problem, and we don't want to recognize it. The $34 trillion referred to as that debt level. The deficit running about $2 trillion in a fully employed economy. The trouble is, you don't know when this shit hits the fan. I could just point out to you, in 1972, there were two prominent citizens that were spending money out of their own pocket to alert the public to the evils of the budget deficit. There was Henry Fowler, former Secretary of the Treasury, and Pete Peterson, who was both Fowler and Peterson were good friends. and they spend $40,000 out of their own pocket to run full-page ads in the Journal and Times to alert the public to the evils of the budget deficit. The problems are much greater now than they were back then, and yet the only significance of the deficit, we have the lowest interest rates in the history of the world. So nobody knows when the shit hits the fan. I think it's closer at hand than we think. And basically, I think we've had terrible policies, and you can blame both parties. I think we have a system of government, of leadership at a crisis. We're living too comfortably with the policies that we have. And I think we're due for a crisis, and that crisis is not discounted in the market. But we don't know when it hits. And to show you how people don't know what's going on, a guy that I have enormous respect for is Jamie Dimon. And he says the 10-year can be 2% or 8%. That's not a forecast. You know, it's totally different worlds. He's talking about really inflation or deflation.
Very true. I'm going to have what some people will call a hot take. And I'm a libertarian, so it's shocking for me to say this, and I got a feeling you're going to vehemently disagree, but I will state it anyway. Could I make the argument, even with the horrific deficit that we have, and it is not good, and personal debt that is just incredible, and that's a major problem. But back to the deficit, could I make the point that as long as where the dollar dominates, the world settles in dollars, lots of countries, quote unquote, have our debt, that we have a level of control, a level of a heavy hammer, of a strong fist? Could I make the argument the deficit is a little overblown for American interest?
Yeah, until those things change.
I
I assume that gold and Bitcoin are leading the way to a potential change in policies.
Could you see the BRICS plus now Saudi Arabia and others combining, which they kind of are, but what does that really mean? And partially backing a potential currency by commodities. Is that what you're potentially talking about?
Yeah, I think that the stock market is overvalued and bonds are overvalued. So they have to find something else that works.
Excellent points. The US has been dominant since Bretton Woods, quote unquote, with the dollar. We came off, I believe it was the gold standard in 1971. So technically it's just backed by the full faith and credit of the US government, which used to carry an incredible amount of clout and kind of has worked. And technically, even right now, but like you said, haven't we been calling for the death of the dollar for 10 or 20 years? Is there really a suitable replacement in a foreseeable future?
Probably not, but we're the tallest midget in the land of the midgets, and they say in the land of the blind, the one-eyed man is king. We're the one-eyed man, but that can change. It's going to change when people least expect it. Everybody on Wall Street is bullish, so maybe we have to shake that loose a little bit.
And I believe the comment that you said about Jamie Dimon and effectively treasury rates kind of applies to my next question. Right now, as an investor, I'm used to 20 years of artificially low rates. My cash gets nothing. It's good for the markets. I put my money in the market. But now, could I make the argument as an ultra high net worth investor, I'm getting 5% on my cash. Why do I want to take the risk of going into a market where maybe the spread I'm going to get is from 5 to 8% to 9%, but what risk am I taking with that?
Yeah, I would say, look, you have to do what you're comfortable doing. And I would say that most models I look at suggest stocks are expensive against bonds, but I think bonds are overvalued. So if the stock market has a headwind with existing interest rates, all this talk about interest rates being too high and the Fed being too restrictive, give me the example where the Fed is being restrictive. We got the SPAC crap with Trump showing the speculative juices of people. We have the stock market up until today near historic highs, and the economy is doing fine. There's no suggestion that interest rates are too high. I grew up in the 60s and 70s where the expressions guns and butter and crowding out existed. You don't have many people talking about that, but I think we're going to have crowding out, and I think we have guns and butter. And I think people are going to get tired of holding out debt. No, I would say that I think that the attitude will change, but you don't know the timing of it. And we've been in an extraordinarily bifurcated market. You got lots of stocks around that are cheap and attractive, and you have the Magnificent Seven. I think it's a real conundrum. The multiples of the Magnificent Seven suggest the market is willing to have a very long-term horizon. Yet I find things that I can't explain with their valuation. I'll give you an example. I have a very small position in something called Manchester United. Radcliffe just bought 25% of the company, paid 33. His contract says he has to come back within a year to buy the rest. He cannot buy the rest at a lower price. If he doesn't come back within a year, the family that controls it has the right to shop the company. The stock is $14. He just paid $33 less than a month ago. So, I'm willing to buy something like that. I can give you other examples.
No, that's a very good point. Back a little bit to some of the economic issues that I leaned in with my initial questions. We're led to believe the inflation rate is a certain percentage. What is it currently? About 4%. It's per person. If I'm an ultra high net worth individual, I'm buying filet mignons, I'm buying expensive cars, I'm traveling, I'm living the life that for me, the true inflation rate, could I argue, is closer to 10 or 15%. And if I invest too conservatively, relative net of taxes, inflation, and fees, I may not maintain my purchasing power over decades.
Look, in bear markets, he who loses least wins. So, you got to do it. If you deal with wealthy investors, they have to do what they're comfortable doing. You don't want to do anything you're uncomfortable doing. But I would say that, I have a bifurcated portfolio. I own Google and Microsoft, and that's the only thing I own in the Magnificent Seven. The others, I don't own them, but I own a lot of cheap stocks. I was up 18% last year. I'm up before today, 8% this year. I'm happy. Probably lost a point this year, today. The market was down, 0.4, 1.4. I think you got your client base, wealthy individuals, they have to do what they're comfortable doing. And I'm uncomfortable. I think we have guns and butter, and we have crowding out like they take place. And we have two guys running for office. One's bad, the other one's worse.
Later on, I'll ask you which one is which, but we'll leave a hook for that in about half an hour. In terms of what you said about Microsoft and Google, Microsoft, if I look back 30 years ago, they were a top 10 company. 20 years ago, 10 years ago, they're the one company, if I go back 20 years, that I believe has been on the top 10 and currently number one. What is the moat that they have, and why do you still think it's a good investment?
Well, basically, the moat they have is their technology and their balance sheet and their cash flow generation and superior management. I don't bring anything to the party. I'm not a big technology guy, but Google and Microsoft, my windows on technology. They know more than I know.
And I do have to ask, because it's been an incredible year and a half, do you have an opinion about NVIDIA?
I think we're in a bubble period. It's the third bubble period I've been through. I'll answer the question indirectly. So the first bubble period was 1972 Nifty 50. That ended when OPEC increased the price of oil tenfold. We fell into recession. It was more than a decade for these companies to recover from where they were, because back then the roost was being ruled by JP Morgan US Trust. Their philosophy was only the right stock at any price. They didn't care what they paid as long as they were buying a world-class growth company. Those stocks got up to 50, 60, 70 times earnings, and they collapsed and took well more than a decade to recover. Many of them didn't even recover. The second bubble was the technology bubble of 2000. And the then present, the equivalent of NVIDIA then was Cisco, much higher multiple now than NVIDIA, but Cisco was to be the way to play the internet, and it got to over 300 times earnings. And the internet did work out well, right? But Cisco dropped 90% in 2001, 2002, and still sells at a lower price today than it sold at 24 years ago. Amazing. And the internet is delivered. So I would say NVIDIA is in a great position now. Management is extremely optimistic. I cut my teeth studying Henry Singleton, the founder of Teledyne, for
Mhm.
25 years. I visit with him twice a year for 25 years. He's deceased now. And basically, he perfected stock repurchase. And he bought his stock when stock was down. NVIDIA announces a $2 billion repurchase program. The stock is up 5 or 6 or 7-fold. So they're very optimistic. But I recognize stocks have a memory. They know where they came from. NVIDIA has a 2 times or 3 times expansion in their profit margin. And my guess is every boardroom in America is looking to knock off NVIDIA. So I think the third bubble will burst either when we get into a recession or NVIDIA blows up. And my guess is we'll have a recession before NVIDIA blows up. One of those two things will have to happen.
Do you think it's possible that interest rates could rise significantly, even in an election year, and I mean significantly, to 10%?
I don't think that will happen this year, but I think interest rates are too low. Prior to 2008, the great financial crisis, the 10-year bond yielded in line with nominal GDP. Nominal GDP is a summation of inflation and real growth. Let's say real growth is 2%. Let's say inflation is 3 or 4. The 10-year wouldn't be attractive as even 5 or 6%. Wouldn't that be? And I think we're experiencing what I call shrinkflation. I was recently honored by the New York Yankees, and I was offered the opportunity to throw out a pregame pitch. I had not been to a ball game for about 30 years. I'm not a big sports enthusiast. I went to Yankee Stadium, and I have a torn rotator cuff, so I imported my youngest son, who lives in Vermont, to throw out the pitch. He threw a perfect strike in his, and his credit. But when I went to the ball game, I was shocked by what I saw. A bottle of water, $6. A hot dog, $8. I grew up in the Bronx. There used to a guy we come around to our school. We called him Pop. He came around with a carriage and a white laundry bag full of pretzels, 2 for a nickel. At the stadium was $13 a pretzel. Okay, and then lastly, I bought my grandson a cap with a Yankee insignia. I was stupid for buying it, $56. But I didn't want to just. It's a $2 cap. Okay, I bought a car in 2017, a Hyundai. I paid $54,000 for it. I went to replace it, the same exact car 5 years later, $104,000, and I didn't buy it, even though I could afford it, because I only have 25,000 miles on the 2017. So I think the economy is going to shrink because people can't afford the prices that we're seeing, and that's why people are very unhappy. And that explains the popularity of Donald Trump. It's an unhappy country that has a Donald Trump being as strong in the polls as he is.
Since you did bring that up, in 1 second, I'm going to come back to that. But what you just said relates to my story about inflation. We don't really have the true numbers for inflation. It's somewhat misleading, somewhat individualized. I finally said it correctly. And the fact that it literally, like you said, you do the math on that, that's not 3 or 4% a year. That's a lot more. But back a little bit to maybe more of even effectively how I open broadly about the economy. If the main drivers of economic growth in the long run are working age population growth and productivity growth, both peaked decades ago in the 80s. So what could keep this afloat?
AI could promote productivity. And
That led into my next question, because we have so much debt now. What is going to get us out of that? Now, we are the world reserve currency, and I did also obviously mention that earlier. We all know that. We do have some things. China is not winning at everything. Could AI be a game changer for productivity?
it could enhance productivity, but I'm inclined to think in terms of the more things change, the more they remain the same. So it'll be an enhancement to productivity, but I don't think it's a game changer.
I mean, it's a deeper question on technology, probably not either of our strong points, but could you see if it's going to be enhanced? I think it was Elon Musk who said 800x more powerful in 2 years. What is going to happen to jobs as we know it? And could you see a future, and I don't mean decades out, where so we don't have riots in the streets with a loss of jobs, might we need to have universal base income?
I don't think in those terms. I think more of evolutionary rather than revolutionary. Go back to Y2K. everybody's saying the end of the world, the end of the world was nothing. So everybody is talking artificial intelligence. My guess is it'll be a positive, but not a game changer. I could be wrong. I think when it really comes down to, in my own view, is a 21 multiple, which what the market's selling at, is too high relative to all the uncertainties that exist. That's my bottom line. And we have the uncertainties on the election. We have the uncertainties of the debt. We have uncertainties of fighting wars on two fronts in Ukraine and Israel. I just think that there's too much going on for the market to be justified to be at this multiple.
And in what scenario, I know it's been up a fair amount lately, but in what scenario, it's probably a bad one. In what scenario could you see gold going to 5,000?
I'm not a gold buff, but I would say the Fed caves in, monetizes inflation, and does not induce recession.
Yeah, no, certainly you can make those points. And you did bring it up twice, so I'm going to have to jump into it a little bit. I believe when I did a brief interview with you at a private home in Palm Beach, right before COVID, February of 2020, you did mention, yeah, sure, from New York. Of course, I met Donald Trump multiple times. And I think you basically said, this man has a huge ego. It probably got bigger. But we're in a tough situation now because let's just be honest. I look at you in the face and say, Biden, forget about our politics left or right, that Biden is an incredible president. I can't appear to say that. Do we again have bad choices?
Very bad choices. I think one choice is bad, the other one is worse. And depending upon the day, you're asking me which is worse and which is bad.
Yes, which is worse, Lee?
It depends upon your beliefs. I signed off on Donald Trump very early on in his presidency when he chose to mock a New York Times reporter that had cerebral palsy. He further distanced me from him when he mocked John McCain, a true war hero.
Of course.
He refused to leave a prisoner of war camp unless his fellow prisoners were released. He then mocked Nikki Haley's husband, who was serving the country with distinction in the Middle East. The man has no judgment. He's not a leader. He's not a leader. 20 people in government that have worked with him have come out against him. Those are the people that were intimately close with him that he hired to work with him. And they said that they wouldn't work with him again. And then we have Biden, who is in the pocket of the progressives. Obama is a better man, a better person, but he's Obama's third term. And I disagree with Obama's approach to business.
And Lee, who would have been a viable candidate, either party, to you?
Well, let me tell you my voting record. In 2016, I wrote in Mitt Romney as my choice. I didn't vote for Clinton. I did not vote for Trump. In 2020, I voted for Biden because I have a negative view of Trump. I would not vote for Biden again. I invite you in. You seem like a smart guy. Maybe I'll write you in.
No, I think the country could do a lot better than that. But thank you, by the way. When I go back a little bit to
Let me tell you a little something.
Sure.
In 1776, when the nation was founded, the population of the country was 2.5 million people. 1 million were women that did not have the right to vote, and 250,000 were slaves that did not have the right to vote. So a voting population of 1,250,000 found Washington, Jefferson, Hamilton, Madison, etc. We now have 300 plus million voters, and we found Biden and Trump. It's a very sad state of affairs. I just noticed recently that in the state of Washington, they said if you want to practice law, you don't have to pass the bar, because a lot of the minorities were having trouble passing the bar. Why are we dumbing down the country? We should be committed to exceptionalism. Fair, but exceptionalism.
100%. I completely agree. 34% of public pension portfolios are allocated to non-publicly traded assets, private equity, real estate. It used to be 9% just a little over 20 years ago. Is this an area of concern?
Well, the less liquid, depends what you own, depends what you invested in. Look, people are moving out on the risk curve because they're having trouble generating returns. And I would say that private equity in private companies has more risk than public equities.
Good point. And there's someone I believe that we mutually know. He's a newer friend of mine, a George Siguler, who was active in helping to create the Harvard Endowment. And that eventually led to others like Yale and Swenson. You've been in the hedge fund industry. We could go back to 40, 50 years ago when they were basically all invested effectively in bonds and traditional publicly traded securities. Especially Swenson changed that to farmland, timber,
That's right.
definitely venture capital. Things changed.
Money goes where money is treated best. So if they got better returns in private equity, they'll put more money in private equity. But the truth of the matter is, the returns in private equity result importantly from the leverage that was employed.
100%.
It benefited greatly by the enormous decline in interest rates. I think if you're going into a deal now, anybody betting on declining interest rates to bail you out is making a very bad bet. You're betting upon a depression. So if the exit multiple is lower than the entry multiple, it's very hard to make money. It's a question whether the price level is adjusted. The other thing I would say is private equity was not well understood 20 years ago. It's very well understood now. So to the extent that there's more competition for the companies, the valuations have gone up.
And Lee, talking a little bit about that, you're really one of the pioneers in the world of hedge funds, being someone who one of my co-bases is in Greenwich, Connecticut, and being in the family office community for so many years. Hopefully it's something I would have a little bit of knowledge of. How could we not be a little disappointed? And the reason is why, but net of taxes and fees, I'm either not seeing great hedging, broadly speaking, or not seeing true alpha returns. Is the hedge fund industry as we used to know it in peril?
I would say now is a good time to invest in a hedge fund. And we're back into a two-way market. You know, one of the reasons the hedge funds have done poorly is when they kept interest rate at zero for a decade. If you were running a hedge fund, you were hedged. You weren't fully invested. And any hedge was a hedge against returns. Now that interest rates are going up as a return on cash, you're in a two-way market. So I think hedge funds makes more sense now than they did going back 8, 10 years ago.
Could I make the argument?
I'm not selling anything. I'm retired. I wouldn't take money off of the money.
But actually, on that note, and I guess there's various sectors within hedge funds where maybe scaling actually is an advantage. But could I make the argument with billions and billions and billions of dollars in certain funds that are placating to institutions, not families, not family offices that could be tax sensitive, that they're playing a little bit of a safety game. They're becoming an asset gatherer. If you were investing actively in hedge funds yourself these days, might you skew, depending on what vertical or sector, to smaller to small mid managers?
I would. That would be my nature. I would basically, I would understand what the manager's value proposition is. And if his value proposition fit with what I was looking for, then I would invest. But if his value proposition is not what I'm looking for, then I wouldn't invest. So for example, if you're worried about tax efficiency, investigate the manager's approach towards tax efficiency. The one thing that's most impressive about Warren Buffett's record is not his stock picking, but basically is his after-tax returns, which his holding period was so long, you know, and about 50 years ago or 40 years ago, one of his annual reports, he went through the arithmetic of showing the return of buying every year. You bought the hot stock, you went up 15%, sold it, and reinvested the proceeds. What would you have at the end of 40 years versus the hypothetical example? If you bought the cereal compounder that went up 15% a year, you held it for 40 years, never sold it. You had thousands of times more money after tax. That's where he invests. So if you're tax sensitive, put your money with a manager that's tax sensitive. You know, if you're equity oriented, then go with an equity oriented manager. You know, and you know, if you want fixed income or you want macro, just find the right guy that fits your cup of tea.
Would you agree, and I've interviewed at events Jim Chanos many times, that looking to every year be excellent at hedging risk, at being the true definition of a hedge fund and knowing where to short, that's an incredibly hard game over the long term.
Yeah, well, first of all, you can't talk about short selling and tax efficiency. You could be short selling for 100 years and still be short term. You can't go long term in a short. Jimmy was a very good short seller, but the market became irrational, and because we had stupid monetary policy. We had Powell keeping interest rates at zero for a decade, pulling forward demand, okay, telling the public that the market was not overvalued given where interest rates were. He never bothered telling the public that interest rates didn't belong at zero. And then in 1 year, he abruptly raised them 500 basis points in a year. He stabilized the system. Now he's talking about cutting rates, and the economy is clearly in need of rate cutting.
And Leon, I know it's a little bit out of left field, but we can't ignore there is an elephant around the world. It's not just the US, although the dollar is still king, it's China. Broadly speaking, and I guess a brief recap, what would be your outlook for China and its impact on both us in the US and the world?
Well, I come from the school of thought that every economic recovery brings with it the seeds for the next recession. Every recession brings with it the seeds of recovery. So China's going through a difficult period. They'll cope with it. I'm not an investor in China because I don't have clients and I have a family office. I'm not so big where I have to be globally diversified. But I would say that China probably makes sense right here, right now.
But I trust in their public equities, effectively the accounting.
No, I think you can't trust the rule of law, but I don't have any money in China. But there's a valuation discrepancy. You're probably better off talking to me about things other than China or Bitcoin.
Of course. But you do bring up a topic that I am going to relate to it. You mentioned rule of law. In the US, we have many advantages. We have fish on both sides, on the left and right. We have, let's go.
My biggest position is a play on the abusive behavior of government. I own a big position in Legato first lien paper. Okay, the Legato's principal asset, they own 40 megahertz of 5G spectrum. Okay, the spectrum is probably worth $40 billion. You could create the company for about $1 billion of value now, given where the bonds are trading. And what happened is for 7 or 8 years ago, the government falsely, and I say falsely, alleged the spectrum interfered with the GPS system. And the FCC is responsible for setting spectrum policy in the country. They studied the Department of Defense allegations for 5 years. After 5 years, they concluded by a 5-0 bipartisan vote, the allegations had no merit. And all of a sudden, the Department of Defense changes their story. They say, we want the spectrum for national defense purposes. We're not going to tell you why. I have no problem with that. The question is whether they can take the spectrum for nothing or they have to pay for it. The market is saying they can get it for nothing. I don't think they can. So the first lien bonds have a PIK coupon of 17.5%, are trading at 14 cents on a dollar. I think they're worth par. But you're tackling the government in the court of law. And the chairman of the board of the company, Ivan Seidenberg, used to be head of Verizon, formerly head of the FCC, is on the board. And Jim Donahue, who is number 2 to Craig McCoy of Bill McClure Cellular, is on the board. So these are very real people. And I can't imagine the government could take the spectrum without paying for it. So that's my big position. But if they get away with it, you can forget about investing in the United States, in my opinion.
Wow. No, that's big. And I wouldn't say related to that, but indirectly to quote unquote rule of law, you would hope to be an incredible advantage of the US. But given what we're seeing in society now, given to some level a lack of authority and a weakened military, is the rule of law only defended by strength, including military might?
Well, I wrote a book recently, and I wrote a book because I read that 30 to 40% of the youngsters today in the country think socialism is preferred to capitalism. And I think if the country continues to move to the left, we'll destroy ourselves. And if we have extreme right, we'll destroy ourselves. We need a centrist in charge.
And right now, it's incredible bifurcation, obviously, in the country. A little bit from the global perspective, 10 years ago, I guess it would be unimaginable, certain things I'm going to mention, that Yemeni would face head to head with the UK and the US, and that Russia would I mean, effectively, is much of NATO outside of the US demilitarized? And ex the US, Russia has a far more significant military than NATO. What has Europe and the West effectively done wrong?
I don't know, but I'm not impressed with Russia's military might. They can't even take out the Ukraine.
Well, they're not using nuclear, and hopefully they won't.
That's the only edge they have, and hopefully they won't use it. But I'm not impressed with their conduct of the war. I'm impressed with Putin as a thug, and he surrounded himself with people that can't get to him, they can't assassinate him. But he's cost the country billions and billions of dollars. He's inflicted tremendous hardship on the Ukraine, and for no reason. Well, he has a reason. He wants to rebuild the Soviet Union to its former might. Not going to happen.
Lee, I am assuming that the answer is it's not your focus, but I don't know unless I ask. But a lot of the family offices are active real estate allocators and investors. We could paint a very negative picture for commercial real estate, property values dropping, over levered. Do you have a specific opinion from a family office perspective on investing in real estate?
I have a big position, something called Arbor Realty. They're a big financier of multiple family housing. And I think multiple family housing is under pressure now, but I think it's going to be a survivor. And I have money there. The stock yields 13%, so it's below book value. And it's run by a guy that's been very, very smart, Ivan Kaufman. And he told me a year ago the shit's going to hit the fan, and he's very conservatively postured. So, I think office space is under downward pressure. And everything is cyclical. In the 60s, Prudential Insurance had something called the PRISA Fund. They gave everybody when there was redemption requests, and they came around. This was 50 years ago. And I would say apartments are attractive. This is workforce housing. And immigrants coming to America have to have a place to live. And if I could buy an Arbor Realty at a discount to book, yielding 13%, I think the problems are discounted. On the other hand, the office properties represent a different value picture. Shopping centers are going to be required. They can be converted to marijuana farms.
Lee, I've heard the verbiage inflation hedge, and sometimes it's gold or timber. I think in any one year, it varies what could be an inflation hedge, but over the long haul, blocks of 10 years, can I make the argument that good old quality common stocks over the long term are probably the best inflation hedge?
No question about it. But, it's a function of when you get in and what your patience are. There could be a 10-year period where you don't perform. And I would say that given where the market is trading at now, I don't expect much in the way of equity returns for the next 5 years. I think we've borrowed from the future.
Which probably brings up a good question. We still have about, what, 7, 8 months to go for the remainder of the year. It's obviously a presidential election year that could, quote unquote, manipulate the markets depending on how Biden wants to, quote unquote, play that. How do you think, from an investing perspective, the rest of the year could play out in terms of interest rates and, broadly speaking, being a tactical investor?
I would think interest rates are going to end the year higher than they are now. The short end could be a little bit lower. The long end will be higher than it is now. As I said before, the 10-year government usually yield in line with nominal GDP. If inflation is 3 to 4%, and real growth is at least 2, you could see the 10-year government 5 or 6%, which is much higher than it is now. I don't think short rates are going to go up very much because I think the economy is going to weaken. And I think the stock market is fully valued.
Lee, do you think we'll hit $100 a barrel for oil by the end of the year?
Possible, but I wouldn't bet on it because there's so much shut-in capacity. And I have a big position in oil. But these companies make a lot of money at 80 to 90 barrels in oil. I don't need $100 a barrel.
Lee, could I make the argument as a thesis that certain major sectors could outperform even in the falling market? Could I say energy, defense, agriculture, and mining?
Yes, you could. There's always, as Jim Cramer would say, there's always a bull market somewhere. His job is to find it, right?
That
So
is true.
I have
And
my,
actually, for
I have,
those of you who are active in a futures market, look at what happened with cocoa in the last couple of months or year. It's ridiculous in terms of but I guess that goes to a little bit supply and demand within a given market infrastructure.
I would say I think it's going to be difficult to make money in mainstream assets. I think stocks and bonds are fully valued, but stocks make more sense than bonds. I wouldn't own bonds. I have a portfolio of equities in short dated paper. As the
And
equities I like, as the equities I like decline in price when the market corrected, I would buy those.
Lee, what allocation, and it's going to be individual, I get it, but people seem to like quotes and commentary. Should significant family offices have something more than incredibly nominal an allocation to gold?
I don't own gold, but depends upon you think. You're dealing with wealthy people. People that are wealthy should do what they're comfortable doing. If they want to own 3 or 4% in gold, it's not going to make a difference. The way to own gold historically is you buy a yacht and you buy Cougarans and you line the hull of the yacht with Cougarans and cover them with floorboards, and you sail out of the country and use the Cougarans to bribe border guards. I'm not leaving the United States to go anywhere else. So, if I have 5% in gold and the gold doubles or triples, it's not going to change my life. I
Uh,
have a little bit of gold, not enough to make a difference.
a little bit out of the blue, Lee, but effectively, when I was growing up for blue collar and getting into jobs originally after school, I was kind of in the late 80s, 90s told, listen, for most of you, and I think even Buffett basically said this 60-40, 60-40 allocation. As I've had a little more success and become a more tactical allocator and have more capital for certain alternatives, kind of make an argument. This is easy for me to say now. I do understand that 60-40 is a fabrication of Wall Street to get people to invest, which may not be a bad thing.
I don't know. I would say I don't like bonds. I own very few bonds. I'm a very wealthy guy. What I have in credit, I have in the high yield area with one firm that's been delivering me 1% a month for 8 years, never missed a payment. I can't say that about my real estate guys who missed payments when rents were not paid during COVID.
Huh, that is true. And a little bit more about some of the issues that are occurring now. I believe history shows us, and all of you as family offices should really understand history and a little bit of revolutions from 1620s English Reformation, French Revolution, Russian Revolution, Nazi Germany. There was one common denominator when the masses, when people are spending above 40% of their available income on food, there tends to start be quote unquote uprisings. And this is not a kingdom. I believe so. This is a democracy where there's more have nots than there are haves. How do we balance as people that are successful the fact that the bigger the bifurcation gets, the more likelihood there could be significant civil unrest?
We need intelligent policies, which we don't have right now. And simple as that. We need intelligent policies. Look, Simpson-Bowles Commission 10 years ago came out with recommendations. They were ignored. The problem now is 3 times greater. And Romney and Manchin were on TV about a month ago saying the Simpson-Bowles ideas were good. The problem is 3 times greater than it was when they came out with the original report. We just had very bad leadership.
And Lee, what's your philanthropic interests that are impacting kind of the big picture? As I noted, society feels to be, maybe I would have said this 10, 20, 30 years ago too. It feels worse this time. It feels like it's in chaos. If I have wealth and resources and have the capability, what value could I do in helping my country and helping society and the world with my philanthropic interest?
20 years ago, I couldn't even spell the word philanthropist, but I've given away hundreds of millions of dollars in the last few years. And I pledge to give my entire fortune away, either while I'm alive or after I die. Everything goes into a foundation where my children and grandchildren and daughter-in-laws can give away the money. And basically, I determined a long time ago there's only four things you could do with money. The first thing you could do with money is basically you could spend it on yourself. Now, I'm married 59 years, same woman. We have very different political philosophies, but we have a very similar philosophy of life. That material possessions bring with it as much aggravation as pleasure. So I'm a less is more kind of guy. I don't collect art. I don't collect sports teams. I drive a Hyundai. I don't have a Tesla or a Mercedes or a Bentley or a Rolls Royce. I can afford them. A lot of people in my club drive those kind of cars. And so we had excess savings when I was working. Second thing you do with money, give it to your children. If you have a lot of money, giving all your money to your kids is a mistake because you deprive them of self-achievement. I have my oldest son graduated Stanford Phi Beta as an MBA from Wharton, made it in the hedge fund world, and then retired for his reasons. He says he's not retired. I say he's retired because he doesn't have clients. He runs his own money. And his brother has a PhD degree. He's a scientist, got a PhD degree from Oregon State University, and he's a scientist. Third thing you do with money is give it to the government, but only a fool gives the government money. You don't have to. You pay your taxes. You don't volunteer to pay more. The fourth thing you can do with money is recycle back into society and try to make the world a better place. That's what I've chosen to do with my money. So healthcare and inner city kids are the priorities of my foundation. I have a hospital that used to be called St. Barnabas in New Jersey. It's now called Cooperman Barnabas. I gave them 125 million. They dropped a Saint for a Jew. I just gave 25 million to Boca Regional down here in Boca Raton. I'm a Florida resident. I gave 50 million to send 1,000 kids to college in Newark, New Jersey. I gave $20 million to New Jersey Performing Arts Center for an educational center for the community, etc. So, I'm giving away my money, but I'm giving my money to those institutions and individuals who made a difference to me and my family in my lifetime.
Probably a direction I'm better off not going down, Lee, but I probably can't help myself. Do you have concerns in this country and maybe Western countries that we used to have an incredible quote unquote secondary educational system in college? And I believe we still do. I'm not going to go down the road of the argument, the value of an education in college now versus in the past and how the world is changing. But I will go down the path that a lot of young people are being indoctrinated by, I don't think necessarily a fair system.
Left-wing professors.
You were more blunt than I was, yes.
About a month ago, I was on TV. To be more blunt, I said these college kids today have shit for brains. And let me tell you why I said that. They don't want to, they think they're dealing with the Hudson River or the Nile River. They don't realize it's the Jordan River. And when they advocate from the river to the sea, free Palestine, they don't understand they're advocating for the destruction of Israel. What is Israel? It's the only democracy in the Middle East. It's the only reliable ally the United States has in the Middle East. It's the only country that allows gays and lesbians to practice what they believe in. Other countries, they would kill you if they could legally, if you were gay or lesbian. The West gave money to Israel, and Israel took that money and did constructive things with it. The Palestinians allowed Hamas to get a hold of the largesse in the West, and they built tunnels. I think what's going on in the world is disgraceful.
The whole thing with tenured professors, and you look at the charitable contributions through the universities being, I think, 90% plus towards quote unquote democratic causes. And I'm not saying the right is also good, but I think it probably should be closer to 50-50. Why is it systemic inside the universities that professors feel unencumbered, they have no threat, they're resting on their laurels? I'm sure there's good ones, don't get me wrong, but it seems like it's a messed up system right now.
Share your view. I got a call from the president of Columbia University when I said on TV I had given $50 million to Columbia. I'm finished giving. The president of Columbia called me up, and I didn't get any good answers, but I said to her, I said, basically, why can you simply come out and say the professor that praised Hamas does not speak for the university? We happen to have a totally different view. We'd terminate him if we could, but we can't because he has tenure. There's no room on the campus for hate speech of any kind against any group, whether it be Jewish, Muslims, Chinese, whatever. They equivocated. And it's crazy. There's no basis for anti-Semitism. I think if you're an anti-Semite, it means you're ignorant. And I'm not saying that because you're Jewish. But what is the basis of anti-Semitism? The Jews are 0.3% of the global population, and they have 20% of Nobel Prize winners are Jewish. We've done a lot for the world. It's like penis envy.
In my 400 interviews, I don't think I've ever heard that one, Lee. Thank you for bringing it up. I want to be respectful of your time. I have a couple of quick questions, some of them that people that knew I was going to interview you wanted me to ask. I know it was about a year ago, but we were a little shaken, at least I was, that several of our banks did go under. Do you have concerns about the US banking system?
No. I think that the Fed will be the lender of last resort, and the banking system is stronger today. Whether it's a good business or not, who knows, because there's so much capital being required to run the business. I think guys like Jamie Dimon are very, very smart, and they know what they're doing. I'm not concerned.
Do you think he would make an excellent candidate for a president?
I told him I would like to see him run for president. He said he would like to be president. I think he would do a great job, but he said I'd have to be anointed. I'm not going to run. I have to be anointed. And last time I checked, we don't have a parliamentary system of government.
No, and I am bringing up this question. You're the one who mentioned it way back at the beginning of our interview, but I guess I can't quite let it go. You did mention Bitcoin. Now, people from our era, when it came out, we chuckled and laughed. Well, you know what I'm going to say. What the hell, I'm being nice, is this? But now it is 16 years in, and it's gaining and it's got the spot ETF. Are you a believer enough to maybe allocate 1 or 2%?
I gave some money to a guy who did Bitcoin. I don't believe in it. It's an insignificant investment for me. It went down 50%. I think now he's maybe 5% above my cost. But I take a cop out of Bitcoin. I say that they say if you don't understand Bitcoin, it means you're old. I'm old. I'm 81. Warren Buffett says he wouldn't give you $25 for all the Bitcoin in the country. His partner, who just recently passed away, Charlie Munger, equated it to rat poison. And Jamie Dimon has a negative view. I think that the government's making a mistake by not trying to shut it down before it gets to be so big that they have no choice but to accept it.
Yeah, well, that gets complicated. What I will say about Jamie and knowing a little bit about some of the family office, and what is going on to a little degree in JP Morgan, don't forget, it could be very profitable. They have dozens of employees dedicated to Web3 and crypto. I almost wonder if his words to the public, no offense to Jamie, I think he's talented, of course, as well, but is that a misdirect?
Who knows? At the end of the day, time will tell. I don't know what the inherent value. As I understand the Bitcoin, there's a certain number available, and sorry for the interrupt. Certain number of coins available. If everybody wants to put a little percentage of the net worth in Bitcoin, the price is going to go up. I remember Donaldson, Lufkin, and Generette in the 60s had the shortage of stocks thesis. There's no shortage of stocks.
And that was then. There certainly is no shortage now. For significant families broadly looking at alternatives currently in today's market, do you like things like private credit and niche plays like litigation finance?
Yeah, again, as long as you're doing with somebody you know and you trust, and the fee structure is reasonable, and you understand what they're doing. I have a lot of money with a guy that manages CLO money. He's never missed a payment. He's been paying me over 1% a month, paid weekly. And that's a good return. And I'm happy with it.
Lee,
I don't own conventional US debt, so I think that's overpriced.
I believe it's my last question. You have mentioned some stock names, and my audience greatly appreciates that. Now, again, audience, do your own diligence. You're your own investor. You're your own person. Learn to think for yourself. Actually, on that note, Lee, maybe a question and a half. That is one of the things my audience heard me say over and over and over, think for yourself. Don't just assume what a college professor tells you, unless it's mathematics, is perfectly science. A lot of it's opinion. But how do you think for yourself? How do you even be a contrarian? And I mean, I'm getting into Elon Musk territory here, but first principles thinking, breaking things down. Do you have any advice to how to think for yourself?
Yeah, well, Ben Graham, The Intelligent Investor, written in 1954, 55, said that an analyst evaluates management twice in the decision making. Once to the numbers, a company's return on equity, growth rate, market share, profit margins, balance sheet are a function of the quality of management. The second way you meet management on a face-to-face basis. I don't buy anything where I don't have a chance to talk to management and interrogate them and make a determination of the value principles that they offer. So I have energy exposure, my favorite energy stock. They had a positive announcement this morning. I think the stock actually closed a little down in the day. It's a company called Paramount Resources up in Canada, POU, space CN. They produce about 105,000 barrels of oil a day. They have the capacity in place to produce 150,000. They produce oil at $31 a barrel out of the ground. They have no debt. They own about $5 or $6 a share of other oil companies that generate no income. They just made a sale of $75 million of one of those companies. So they now have cash in excess, no debt, and net cash about 75 million. And they have a dividend yield of 6%, which is twice more than the dividend yield in the market.
Wow.
$2 billion worth of stock is owned by the CEO, who had the benefit of genetics.
Very good sign.
Yeah, exactly. And
Yeah, whenever
and then I
so in some of the VC companies that I occasionally dabble in, and no brainer to me and you, but I got to remind people, I don't know, when it's 5 or 10 years in, it has a level of success, and the founder and the early employees are selling their shares in the secondary markets and all that. Now, there could be reasonable reasons. They've been holding on a long time. They have to do this, they have to do that. But in general, for most purposes, not a good sign. I want people to eat their cooking. I want them to have a lot of skin in the game if possible.
I totally agree. One of my big winners in my career was Teledyne. Henry Singleton did 8 self-tender offers, retired 90% of the stock, never sold a share of his own stock. When he ran the company, he was a 1% owner. When he died, he owned 20% of the company. And he created billions of dollars of value for himself and for the shareholders. Never made more than $1 million a year in compensation. Totally different world today. Guys that get a job and get fired with $50 million severance packages. Warren Buffett says that one of the big problems investors have is dealing with executive compensation. He says the boards of directors hire compensation consultants that go in the name of ratchet, and ratchet. At the end of the day, you got to find somebody you trust and that know what they're doing in the business you understand.
Perhaps impartingly, since my audience loves some of the exact advice on certain companies that you noted, could you leave us with one more, a company, I'm assuming a public equity that you looked at, that it may be good for certain investors to take a peek at and make their own decision?
Yeah, well, Legato was my favorite idea. I just bid today 14 and a half for some first lien paper, and it's about where they're trading. And take a look at Legato. I've spoken to 7 major law firms. They all say the same thing. The government can take the spectrum, but they have to pay for it. And the company is being valued at $1 billion, and they're suing the government for $40 billion. And attached to their lawsuit, they have 3 things they said in their lawsuit. Number 1, the government lied on the oath. Number 2, the government is using their spectrum without paying for it. And number 3, the government made a transaction very difficult because they say if you buy Legato spectrum, you can't do business with the Department of Defense. So they tried to negotiate a settlement with the DOD. They couldn't get to a point where they got an acceptable offer. And they sued the government for $40 billion. Attached to their lawsuit are 2 appraisals, one for $40 billion and one for $20 billion. And the market cap of the company is like $1 billion. And they have more than $1 billion of value in non-contested assets. The terrestrial assets are what's being contested by the government, not the satellite assets. And satellite assets are worth a lot of money, and the world is going in that direction. So it's complicated. If you want something plain and simple, I say Cigna, Apollo, and private equity, attractive. Mr. Cooper, the mortgage finance business, a big winner for us. There's no shortage of good ideas. You just got to be
Well,
willing.
that's always good to know. And Lee, again, you've been overly generous with your time. You're practically an hour. I greatly appreciate it. I will give you a chance, but I think you kind of covered a lot, whether it's something on the election, whether it's something on geopolitics or philanthropy. Is there any parting comments you would like to have to our family offices?
Be a capitalist with a heart. If you've been very successful in life, share your success with others less fortunate, because we are our brother's keeper.
I love it, Lee, and I'll give a parting comment for 1 minute, if you don't mind. One, it's been an honor in terms of having Lee give this amount of his time talking about so many different things with no restrictions, whether it's politics, geopolitics, the economy, going back to Bretton Woods, talking about investing, naming stock picks. We covered a lot of ground in 1 hour. I greatly do appreciate it. I will remind our audience, we're recording this in April of 2024. You may hear this in a day, a week, a month, a year, and opinions could change. At the end of the day, when it comes to investing, you need to think for yourself. You need to make your own decisions. Your financial situation, your liquidity needs, all of that are completely different. We do this for, to some degree, education, perhaps mainly for entertainment. But on that note, I'm Angelo Robles at Family Office TV. Many of you do know me as the founder, but I had an exit. I sold the Family Office Association, and I'm very happy to do the work that I'm doing now in my Family Office Masterclass and my private club, initially limited to only 30 founding families, called SFO Continuity. We're almost there. We have Palm Beach and New York is effectively our hub, and we do programs in my other hub, Jackson Hole, as well as LA, Vienna, long story, but I do love it, Switzerland, and soon to be another location in Asia, but I'll save that one until we officially do that. But feel free to reach out to me at angelorobles.com and make sure to subscribe to my LinkedIn and YouTube platforms. Again, Lee, you've been overly generous. Thank you so much and have a great weekend.
You as well. Thank you very much. God
My
bless.
honor. Thank you. Bye.